Is the housing market headed for hard times? People are really concerned about what to do, whether or not they should do anything, whether or not they should wait. Some of the clients that I'm working with, some of them are just really concerned to the point to where they don't want to do anything. And I totally respect that. They're waiting to see what happens with the economy. Others are in a position where they kind of have to make the move that they've been planning on making for a while. Maybe they're moving from out of town. Maybe they've already sold their house and they're buying another one, or maybe they've agreed to buy one and they need to sell the previous house. Some people are in the market now. Some are waiting, and that's okay. But one thing that is on a lot of people's mind is what's going on with interest rates. So I want to invite Tom Hemmingson into the conversation of Market Line Mortgage. Tom, what can you say about what's happening with interest rates right now?
Great question. I would say there's a lot of things going on with interest rates right now. You have the bond market at historic highs for pricing, which would tell you we should be at historic lows for rates because there's an inverse relationship there. And I would say that rates, while they are at historic lows, I think the bond market would even dictate that they could be even better than where they are right now. But you have a liquidity question and where lenders are going to go on rates. But I would tell you that if you looked to say, I want to get the best possible rate I've ever been able to get in my life, you're probably right at that bottom market right now.
Thanks, Tom, for the comments on the interest rates. And the next piece of the whole equation, if you're thinking about buying or selling, is what's going on with the market, right? So one thing I can tell you is supply right now is remarkably low. So what are we doing in order to move the homes that we've got? Well, a lot of us have shifted to virtual showings and virtual presentations. So if you're interested in seeing a home, we can get in our car, go over to that house and FaceTime you or pull you into a Zoom meeting and just show you around that house so you can get a better idea of how you like it. Also, we'll hold virtual open houses and advertise that, and so that people can attend the meetings when we have the virtual open houses. Just jump on their phones and take a look at the house. So we've got to make a change in order to be able to help people right now. We're shifting to a little bit more technology in order to be able to do that, but that's fine with us, and we're glad to help people however we can do it. We want to be able to, apply whatever measures we can to help get the homes bought and sold. So if you're thinking about buying or selling right now, one thing I can tell you for sure is the interest rates are great. In fact, I pulled up on Freddie Mac's website the last 48 years or so of interest rates. And what it does is it takes each month of each year and it adds it up and it gives you an average for the year. So there's 48 of those years, goes back to, I think, 1971. And what I did is I added up each of those years and divided it by 48, and I've got the average interest rate. So the interest rate on average throughout our history since we've been tracking it is 8.1%. So, Tom, what are interest rates hovering around right now? What's a range? I know it's different for everybody depending on what their credit scores might be. What kind of a range are we looking at for interest rates, say, on an FHA and a conventional loan right now?
So I would think, the big factors that go into that, John, just so people that are watching know, your credit score, your down payment, or ultimately your loan to value are your main drivers in where your rate is. I would say somewhere in that 30-year fixed from 3 to 4% is totally realistic, depending on your credit score mainly. And John, the other thing about how obviously we're not talking about 8, it's interesting how as soon as somebody thinks 3.5 and it goes to 3.75, they think, oh, the world has ended and I can't pay 3.75. I'm going to wait. I looked at the difference between a 3.25 and a 4.25 rate and payment on $350,000, and it was $170 a month. So while you always want to get the lowest possible rate possible, sitting and watching them go against you can really have an impact on you both payment wise and your ability to qualify, because it does impact your debt ratio.
Yeah, for sure. I can understand the thinking that, hey, prices might go down on houses, but as low as interest rates are, even if home prices soften a little bit, if a home that is $400,000 goes down to $395 or $392 with the rates where they're at, you might be missing out on a great opportunity, because if rates go up a little bit, and home prices go down a little bit, most of the time what happens is, unless you have all cash, your payment's probably going to inch up at least a little bit. So
Right.
rates are really good right now. This past weekend, we had a virtual open house, and Tom was able to attend. And Tom, why don't you just kind of let the viewers know what you added to that conversation that day?
Yeah, so what we did is we took whatever the list price was of the house. We did a payment scenario of 20% down, 10% down, or 5% down, and compared those payments, talked about what was the ad for private mortgage insurance if you didn't have the 20% down, and then just kind of parlayed into the beginning parts of a discussion about how do we deal with and maybe get out of paying monthly PMI if it's possible for your given specific deal. So it really, it almost feels like a better interaction than in prior days when you would take somebody to see a house. They would go see them. I would never even be involved in that conversation, and they would call me afterwards. It's almost like point of contact while you're in the house, while they're watching online. They can also get a true understanding of what's it going to cost me to buy the house.
Yeah, hey, I really enjoyed doing that. And I thought it was a great way to bring all the pieces of the puzzle together, instead of having to tell the potential buyers, hey, you should talk to Tom and get some idea of what payments might be like. And that is still true. I would want them to have that one-on-one private conversation, but just to get a general idea of what would happen, what are the different payment scenarios that you could imagine on a house. That was an easy and great way to share that information with several people at a time. And by the way, if you're thinking about selling a house, our next video, how to buy a house before you sell your current house, is a great one to catch. So go over there and see that video, and we'll see you there.